Hello friends, in this short video, I would like to talk briefly about money and investments. People invest here and there without any vision. So what you need to have is that you should stay clearly focused on a few stocks and you have to churn the portfolio and you have to rebalance your portfolio so that you can make decent returns. And you should also avoid overlap of certain funds and stocks. And when you want to make fast money and quick money, you have to stay clearly focused, and you should be very rational, not emotional, and you should have a long horizon, and only then you will be able to get great returns. So, for instance, you can go for 30 stocks and focus clearly and research them. And research is the key. And then you have to get to know the facts and find out the management, whether the management is good or not. Then accordingly, you have to look at, then research. Then you have to invest into stocks. Only then you will be able to get great returns. According to my research, mutual funds are the best way to make money. Rather, they are the indirect way of making money, especially if you are working from 9 to 5. Whereas if you are working, if you are a full-time investor, then you can directly invest into stocks and you can make money. And there are people, they go for IPOs. IPOs are not advisable. A few years ago, people were making money through when they were listed, but now the IPOs are overpriced, and then again they are coming down. So best thing is to directly purchase from the market rather than going through the IPO. When you go for IPO, what happens? The valuations are going up, but the end results are not effective. So then again, when you can go for mutual funds. Then again, more than mutual funds, you can go for ETF, exchange traded funds. They are cost effective, and which, they are a bit better than mutual funds. And this the exchange traded funds, they have a low PE ratio and they are traded at that particular point of time, unlike mutual funds are calculated at the end of the day based on NAV, whereas if you go for ETF, they are calculated at that particular point of time. So that's the difference. It all depends upon you how you want to go about, but currently the trend is leaning towards this exchange traded funds. So then again, if you want to invest into mutual funds, you can invest into lump sum, because when you invest into lump sum, you are likely to get more returns than mutual funds. Mutual funds means you can average the cost. If you go for lump sum, you can invest at any time, but then again you can't time the market. So the better thing is that you can invest lump sum in staggered manner, so that the returns are much better than what you get from one-time investment. So again, research is the key, but again you can't time the market. Then again, people are sometimes they are talking about gold, sometimes silver. So the people are getting carried away by mob and according to the trend. Sometimes the retail investors are losing money. So best thing is to research. Then you have to invest in such a way that with a long view, so that you can make money. But from my observation, most of the retail investors are losing money, because they are when the markets are high, they are investing, then again they are losing. If you look at the gold was high, then silver was high, then again once crypto. So like these things are changing very fast, especially after the Iran war. Things are changed very fast, and then geopolitics are also we have to take into the aspect. Then we have to very much be cautious and calculator when we make investments. Then again, when you make investments, you can invest into small cap, mid cap, and large cap. If you invest into small cap, it's very volatile, but there is less of liquidity. There are some people they go for micro caps, which are much more riskier than small caps, but it depends upon the risk appetite of the people. But again, if you want to make money from micro caps and small caps, you have to do a lot of research, and you have to talk to the management, and you have to get the facts and figures. Then you have to make decisions. Most of the times these small caps are very risky, because of the lack of liquidity. But again, there are people they are making good money from small caps. So it is for you to make a decision, because these are all subject to market risks. So accordingly, you have to make your own decisions. Usually, people get more than 12% return in large cap. Then mid cap means bit better than small cap, bit better than large caps. Then I guess small caps will get more returns, and also they lose money also. So we can't predict all these things. But if you want to, if you want to leverage volatility, so you can go for small caps. Then you can. You have to focus clearly. Then you have to research. Then accordingly, you have to invest so that you can make money. So these are all briefly about large cap, mid cap, and small cap. Then there are some defense stocks. Then again, thematic funds. So like there's so many aspects are involved. So it's a very lengthy topic. So I have briefly summarized about investments. So let me share with you my challenge that I had a brain stroke 5 years ago, and I am gradually recovering. Thank you for empathizing with me, and I have currently health challenges. So thank you for empathizing with me. I request you to consider subscribing and sharing with your networks. Sharing is caring. With gratitude.